I think it's important not to see the developments in Hong Kong as unrelated to US-China relations. I remember, I think the last time I was on the show, talking about the 50,000-foot view shouldn't be seen in the context of a specific issue over trade or tariffs, but instead it should be seen as a much more multifaceted strategic rivalry between the US and China. And I think seen in that context, you have an interesting situation where for several months now, I think the Chinese authorities have been aware that there was a problem which had been paused and not solved in terms of Hong Kong. But then the challenge is, how do you potentially resolve that problem from their perspective without raising tensions with the US at a time when you're trying to seal the truce in trade? I think circumstances have changed a little bit, where the deterioration in relations between the US and China has, to some extent, created an incentive for China to maybe up the stakes slightly. So in that sense, things have changed, and maybe for them, this kind of kills two birds with one stone. It sends quite a strong message to the US after some quite aggressive discussions between the two with regard to the responsibility for the virus and so on. But it also deals with this problem, which has been outstanding in terms of how interventionist to be with regard to Hong Kong. Now, I think if we just take that across the markets, I think there has been so much focus on the virus, potentially we'll talk about that more, but with all of that focus, I think people have potentially lost sight of that long-term rivalry, and I think we're just starting to see that come back into view, but I think that process has further to run.
What are the implications for stocks then? Because we've seen this story play out before graphically, the hit to luxury because of the operations of those key luxury stores in Hong Kong and whether tourists were willing to go to Hong Kong. We've seen it play out on travel stocks. Also, some of the big banks, the likes of HSBC, do the same trades that we saw back when protesters were out on the streets in Hong Kong come back into the mix again today?
I think there are a couple of interesting potential kind of themes within that. One point is some of those sectors that you're talking about, if you think about banks, think about airlines, these are sectors that were already under quite a lot of pressure from the coronavirus if you look at their relative performance versus the broader market. And I wouldn't expect to see that change. I think where things could be much more interesting is actually going back to some of the earlier stages of the trade tensions. You actually saw some difficulties for what have so far been some of the winners this year. So if we think about some of the larger tech companies that do rely on building their footprint out globally, and at what stage do investors come to challenge that again? Now, personally, I think there may be some reasons coming from the virus itself and the lockdowns to reevaluate that the value placed on those business models. But I think this just provides another reason why people may need to think again about those investments.